This is a powerful, simple price action trading example. This is the stock of Nvidia. This is on a 2-minute time frame like Oliver Velez teaches. What we have here is the market opening at 3:30 Danish time, and as you can see, we have the 20 and the 200 moving average here with some distance in between and some distance to the price. That doesn't mean the price cannot go up, but it can also go down, because if it has dual space, it will be too far away from the moving averages and it needs to go back. Okay, anyhow, what I was starting to do here was I was looking at the 2-minute chart. Sometimes the 3-minute chart actually produces a little bit better, views on the price action than the 2-minute does, even though this is the 2-minute that Oliver he actually teaches from. So if you see here these two first bars, well, you can say this is a little bit hard for me to see. So it's okay to switch sometimes to the 3-minute and say, okay, because at that time you will see the green bar producing here. So first of all, you will actually get, because this is in a powerful move, you can see the blue line, the 20 moving average is pointing upwards. You have the 200 here, and you have the last price action here, the fabulous 4. You can see that price is actually pushing up. So this gives you an entry as soon as this bar gets crossed. Now, in this case, you get this tail bar on top here. I just drew in the last previous resistance area here just to know where they are. I'm not following them blindly, but you know, sometimes market sometimes rhymes and say, well, this was previous resistance and it's going to come resistance again. But here comes the cool part. I actually did some of the trade myself. That on the 3-minute, you have a tail bar right from the resistance area. This is a really, really nice warning that something is about to turn. So what I would do is I would short as soon as the green bar here gets taken out, and I would put my stop on top of the green bar, which is here. So from the short here, you can follow it here, and then you get a pause bar, and then you get one more with this, actually a 3-bar play. So this allows you to put in another short. That means that you are now adding to the position. So that means you have a short running from here, you have a short running from here. So the only question left now is, when do you actually close the trade, or what signal do you need to see to close the trade? Well, according to me, I would say that as soon as you see an event like a bear 180, in this case a bull 180 because it has to turn the other way around, or you get a tail bar, I would probably close it. But the easiest ways to manage, regardless of whether you're on the 2-minute chart like here or on the 3-minute chart, is to say, when the last bullet, in this case bearish elephant bar is taken out, I would probably close my trade. So here you can actually monitor and say, well, here on the 2-minute there's a very bearish bar that almost gets taken out, but not completely. So I would then follow down and say, well, here we have another bearish elephant bar. When does this one get taken out? Well, it gets taken out right here at about 729.78. You can also see on the 3-minute, you have here again the price, and here you have more or less the same area, because the next bar actually takes this one out. So that means around here is actually when the, the trade is over there. So that means from the first short, you would have been making $10.78 in a matter of 9 bars, which is 3 minutes long, so that's 27 minutes. Plus, you will have made, in this case, around $77 in a matter of 6 bars, which is 3 minutes long, which is 18 minutes. So that would actually be a really, really nice trade to make. And it's only done with the powerful, simple price action trading. And of course, I drew in the resistance area. But regardless of the resistance area up here, I would still have to, rely and act upon the signal that I saw. Of course, there could be a chance where price just goes down a little bit and then goes up again, because it continues further. I mean, this is a move up, then you get a retracement, and then you get another move up. But that's where you from when you have your entry here, that you move your stop loss to break even, so at least you go out on break even.